I mean, we are at an interesting time where, every women's magazine is trying to find a way to allow its readers to scan an image with their phone and buy that item.
But disingenuously.
Whether it's it's editorial content or is it not, there's this funny line
But the problem is that those women's magazines don't actually own the customer experience.
Right.
They don't own the product. They don't own the fulfillment. They don't own the customer service. And so what they are is either a glorified affiliate, which is not a great business. It's incredibly low margin. It is. It's proven to not really work, or they are just trying to add some element of direct response into their brand advertising mix, but it's really sort of, it's a lot of smoke and mirrors, and it's really for getting press. It's not actually for helping those businesses grow. And I think that the risk needed to be that big media companies and really media owners need to take is they need to understand the fact that they have an incredibly valuable asset. A huge group of users who trust them, who are influenced by them, and who ultimately, on some level, will do the things that they recommend. That is a very valuable asset, but to really take advantage of it, you need to actually jump in with both feet and decide that you're going to ultimately control the customer experience, really understand those users, and sell them products directly. And that's what we did. And again, as I say in the Inc. article, we can say it was because we were brave. It was because we were naive. Commerce is a bear, but it is worth, the juice is worth the squeeze, so to speak.
Right. Yeah, I wanted to talk with you a little bit about that, because you say, you just have to jump right in with both feet. But for you, that was really quite a period of contemplation and a time of, gosh, is this doing the right thing for the business? Might we be risking everything? And I mean, at some level, you did risk everything.
I think we did risk everything.
Talk a little bit about that process that you went through in determining whether it was the right course of action to acquire Jack Threads.
Well, so when we did the deal, we were not well funded. Jack Threads was even less well funded. We were dealing with a business that we thought was big, our business, which was in fact sort of not really all that big. And we were acquiring a business that was really very small at that point. So the financial risk was not, we're betting the company, we're betting everything we have. It was, we're buying a really little company. We don't even have all that much cash in the first place. This is not a big transaction. This is about the future. Jason isn't doing this partnership. Jason, the founder of Jack Threads, isn't doing this because, Jason Ross, is not doing this because he wants to cash out today. Jason is doing this because he wants to build a big business over the course of time and shares a vision with me and with us around what content and commerce can mean. The big risk was if we went and tried this and it fell flat. What that says about our chances of building commerce. I think as you think about sort of asset value, so much of asset value is tied up in hope. So, I mean, even the public markets, it's people want to believe that amazing things are going to happen, particularly in a bull market. And early stage technology is, generally speaking, just like a super bull market these days. People want the next Facebook, the next Uber, the next whatever. And a lot of the valuations that you see in non-public businesses are speculative, based on hoping that some things can happen. And so the idea that we were actually going to go and do commerce, if we didn't do it well, we would have been way better off just saying, but look, we could do it because our guys buy the stuff that we talk about, and we would get value for that beyond doing commerce decently. And so we risked that, and look, the bigger risk is frankly the opportunity cost of distracting ourselves from being single-minded. Content creation, sell ads, to go and add in the layers of fulfillment, of private label, of merchandising, of inventory management, of customer service. That is a distraction, even if you scale up your team and bring in all new people to handle this. There's only so many hours a day that me and my management team can think about stuff, and that distracts you from your core mission. And doing one thing well is hard, doing two things well is really, really hard, and we've proven it's possible. but that was the big risk, which was we're in essence going to give up some of the growth that we think we would see in the content side because we're just going to give up some of the focus.
Right. To what extent did you know what you were getting into?
We did not. We did not know what we were getting into. I think we knew that we wanted to build a meaningful commerce business, and I think we knew that we wanted to build lifestyle brands and not have Jack Threads be a store and not have Thrillist be a magazine, and build content and commerce across both. And I think we knew that that was going to be the plan, but how it actually manifested itself, sort of the life cycle of getting there, and just the challenges of having to learn what a scaled commerce business infrastructure looks like. We've sort of learned a lot every step of the way, but I think it's also reinforced our confidence that we can figure anything out. That we, if a challenge gets thrown our way, we have the kind of thinking and the kind of people and the kind of, just the balls to go and sort of lean in and take it on. And it's really been amazing for the business. I think it's been great, obviously, for sort of our value, but that is, so secondary to what it's actually just meant to the importance of the brand, to the number of consumers we get to touch, and the depth of the relationship that we've been able to build with our audience as a result of being a content and commerce business at once.
Right. Has there been a time since that acquisition where you thought, just like you said, you have the team that can get through anything? Has there been a time though that you felt like, oh, this is not something we can really get past?
Probably like earlier this morning and yesterday afternoon.
Right.
Yeah, all the time. I mean, yes. And there have been times over the last few years where at various days I've woken up and said, oh, why are we doing both? Maybe we should just be a commerce business that's growing so fast. Or, oh my God, commerce is such a bear. Things were so much easier when we were just media. Of course. And this happens all the time, and we second guess ourselves. I guess we've second guessed ourselves enough time over the years that when we do now, we have enough people, we sort of sit down and laugh about it and say, can we just quickly remember that we had this conversation 6 months ago about the exact opposite problem? We don't have enough inventory, the world is falling apart. We have too much inventory, the world is falling apart. This has happened so many times, and I think that this is the life cycle that any business goes through. I see this at Lerer Hippo Ventures, when we invest in companies and I spend time with founders there. Everybody questions themselves. Being a founder is very lonely. There are many dark days. There's lots of times where we just say we've bit off more than we can chew, and to date we've been able to overcome those obstacles, and enough. We've done that consistently enough that I don't think that we will ever not be able to overcome the challenges in front of us. I just, at this point, my confidence gets shaken, but it does not get broken.
That's great. I've got a couple more questions for you, and then we're going to take a few questions also from our live chat audience.
Frightening.
And
cool.
From Twitter and across all these social media.
Okay.
So after the acquisition, how do you kind of keep that company culture that you had worked on so much in the early years? How do you keep that kind of consistent, or how do you allow it to be flexible enough to really bring in a whole other group of people and let the company kind of naturally become one?
Great question. And we're thinking a lot about this recently. So, when we bought Jack Threads, they were small, so they were probably 8 people.
Okay.
Thrillist was probably 40 people. Yeah. So from a culture perspective, that's actually a big deal.
Yeah.
I think we have done a good job letting each of the brands build their own culture, and not even each of the brands, each of the teams. So we have a technology culture at the TMG where, our tech team has their own logo.
Cool.
Our events team has their own logo. We've built these internal groups that take real pride in what they do, real ownership of what they do. Of course, they're connected to a core, but we've built culture not just with Thrillist culture, super compressor culture, Jack Threads culture, but we've built sales culture or we've built merchandising culture.
That's cool.
So
because they're each, a couple dozen people at least, and once they get to be that size.
I mean, our events team is 3 or 4 people, and they're like, they can be cultish in the way that they roll. I mean, and that is part of creating an environment where people take pride in what they do, and where we have fun we have fun, frankly. And what we're actually trying to do is a pretty cool, noble cause, like help guys live fun lives. And we do all this really complex, crazy, weird, hard stuff in the background so that guys can like look a little better and like eat a little better and have a little bit more fun and like hook up a little bit more and like do things that are like sort of
so
not
noble.
I consider that to be incredibly noble, because actually at the end of the day, like, what's life if you're not enjoying it?
YOLO,
so that is YOLO. Thank you, Christine. So that is definitely part of what we are all about. That being said, we are making a lot of we're making a conscious effort right now to be one company, and so we don't want the individual cultures to end up being silos. And next week is our company picnic, and so every year we do a picnic where for 2 days everyone from all around the country comes in, and we do a day of content, and then we do a night and a day of extreme partying.
Wow.
And the content portion, the theme is going to be about one company. And the theme this year is Camp TMG, but
Cool.
it's one company, and even though there are teams doing things that are very specifically focused on one of the brands, it really is about this centralized core and this group of shared services, this technology and data and marketing platform that we've built at the core. And it's about enabling each group to really take advantage of the platform. And I don't want the company to splinter off into these different competing groups. I really want everybody to work together, and so we have a bunch of services that are centralized, and over time I think more and more of the business is going to be this foundation, and then each of the brands will be represented by a handful or a large handful of people that represent the tone and the voice and the social presence, but that really plug back into editorial best practices, social best practices, centralized merchandising and planning and fulfillment and customer service, and really building out a core staple of sort of functions that we do at a really high level, and then let the brands have their own DNA.
It's really great. What is Camp Thrillist?
Camp TMG.
Yeah, Camp TMG.
Camp TMG.
What does it entail?
It entails, so we do a lunch in the office next Thursday.
But is there camping?
No.
Okay.
Well, you can actually go to, if you go to tmgpicnic.com, this speaks to the culture of the company.
Okay.
tmgpicnic.com was built by one of the people on the product team who wants to learn to code, and on a nights and weekend project built an itinerary website for the company around the picnic and a countdown for the picnic, just for fun.
Wow.
And as a resource.
So cool.
This isn't, and like that sort of speaks to the kind of projects that we're doing. We also, another fun one, talk about our tech culture. Our tech team built an app that is about to launch. It may be live in the App Store, but they continue to evolve it, called Essen. And it's a tool that they made because as the company got bigger, it became harder and harder for people to schedule coffees or lunches or breakfasts or meals with their peers who are now working on other floors or in other offices. And so it's a tool that's for any company to use, but where you identify your company and then you can go and actually use it to easily schedule social time with employees of the business. And that came out of Hacker Friday, where every few weeks the whole tech and product team shuts down at 1, and for the rest of the evening just build stuff that they think is cool and fun. Some of it related to the company, some of it not. Some of the people painted the office one day. Like it just speaks to sort of like this, the separation between life and work. Isn't something, particularly in a place like New York, it just doesn't exist.
Right.
And so rather than not having it exist because you set hard, firm rules that you're in at 9 and out at 8, you just make it a fun place to be, and you let people actually do things that are like enjoyable and are not task oriented when they're in the office.
Right. Do you guys still have a fully stocked bar?
We actually have 7 fully stocked bars.
Wow. So was the painting of the office good?
The painting of the office the painting of the office, I have to say, was incredibly good,
cool.
but it was done in a very sort of tech and product way where they figured out a way to actually use a projector and to project the image onto the wall so that they had the lines drawn. Like,
definitely.
It's like, it's not the way that I would paint.
I'm sorry, I was just looking at my phone. I was looking for our
You're on
social media
Instagram?
questions.
On the
No,
gram,
it's
just
not.
like checking
I
out
apologize.
vacation pics?
To our viewers, I could not get the questions.
Oh.
I'm asking for an assist from off camera, but I do have one more question
Okay.
in the meantime. So what's the big goal? 10 years in, you're making the bulk of your revenue from Jack Threads. Are you going to go public someday? Are you?
I don't know what we're going to do. I mean, I think that we have a lot of growth in our media business. Media is on fire in a way that it's never been before. We've really sort of iterated and evolved our ad product to now be something that is not disruptive, but is truly an additive experience where we're working with brands to create some of our best content in partnership with brands. So I really am sort of renewed in my belief that we can have a very big, very important media business to go along with, obviously, the rapidly scaling commerce piece of what we do. Long term, I don't know what the plan is. Again, this is about building a platform. I do think that what we're building is ultimately going to be the basis of a model that every big traditional media company needs to get into. And I believe that it's something that every traditional retailer needs to figure out as they think about ways to make their businesses higher margin and ways to connect more deeply with their audiences through content. And so I do think that what we're building is a really valuable asset through either a media or a commerce lens. But we're also very focused on building something that's self-sustaining, self-sufficient, that does not just require an influx of capital. We've done what we've done on less money than most people with businesses of our size, and we're proud of that. And I think we're focused on being a self-sufficient business that can have optionality if we want to go public, if we want to operate independently. It'll be up to, sort of how we feel, not something that gets dictated by the market.
Right. And another big question that I assume might be on our viewers' minds, you also spend a lot of your time at Lerer Hippo Ventures, and what are, I guess, in that role, what are 2 to 3 things you look for just in characteristics of a startup or its founders before making that investment?
Yeah, so for anyone who is not familiar with LHV, we're a fund focused on early stages of businesses' lives, generally seed stage or sort of early A-round investing. Built in New York, we just raised our 4th fund, which we announced last week, which is $62 million.
Congratulations.
Thank you. Really excited, which is larger, about twice as large as our 3rd fund, which was our biggest prior to that. At the fund, there's sort of an array of different areas of interest and expertise, and so I tend to really like sort of content and commerce businesses,
Yeah, sure.
as you might have guessed. I'm also really a big fan of investing in SaaS businesses, software as a service businesses, that I understand because that could be a potential client. So the kind of companies that service content or commerce businesses.
Right.
One of my partners in the fund is my dad, who has a media background, and so he tends to make a lot of media investments. He's also just a very gut-driven person, and he really tends to, even more than me, focus on the entrepreneur and find somebody who he thinks is a killer and is willing to make a bet on somebody, and has been repaid for that many times, and I think has a really special eye for it. Our other partner is Eric Hippo, and Eric had been the CEO of Huffington Post and of Ziff Davis before that, and had been an investor at SoftBank. And Eric has a lot of deep experience in also in SaaS businesses, sort of in a range of enterprise businesses, of course in media, in ad tech, and in some fintech. And our fourth partner is a guy named Jordan Cooper, who has built several businesses, who's a buddy of mine from high school. And Jordan tends to focus on big data, on consumer applications. And so between all of us, we cover a wide array of different sectors. I think the commonality is that we are very founder focused, and that we're all operators. We've all built businesses, we've all grown businesses, we all understand the challenges of actually growing a business, and we don't invest like finance guys who we're not just about sort of the return. Of course we're focused on the return, but we're really focused on people who are going to build really special and disruptive things, and that is what we look for, which is awesome people.
Yeah, great. So if you had to boil it down to two specific traits in that entrepreneur and that founder?
I think though probably for me it's a well, two's hard. One is where you're looking for lunatics.
Okay.
I mean, you're looking for people who are totally single-minded, who you sit across the table from them and you know that they will walk through walls to be successful. You know that even if the idea that they are presenting to you doesn't make all that much sense, they will figure that out and they will then do whatever it takes to twist the idea or move the idea or pivot the idea into something that does. And you get that, you sit down with somebody, it's almost like dating. Like you sit down with somebody and you lean back or you lean forward within 5 minutes of meeting someone, and that happens in an investor pitch. You sort of lean in, you're like, this person's a psycho. I like what I'm seeing. And if that's the case, then that's more interesting. A really, tight pitch deck and a really great financial model without a soul isn't interesting to us. And so those tend to be, I think that's sort of the quality, and it's an intangible quality. Of course, you also would love to find people who have been successful in the past. And so we've invested in plenty of 21-year-old kids who have never done anything, but who we just find to be really interesting and potentially extraordinary. But it's great when there's a founder who's done really great things and who comes back. So, very recently we invested in a company called Nozin, founded by Mark Senadella, who founded The Ladders. Mark is a proven entity. He is a LP in Lerer Ventures. He has been extraordinarily successful. He has built a business. He has built a brand. When Mark comes and says he has an idea in and around the job-seeking space, which he clearly knows incredibly well because he had been one of the first employees at Hot Jobs before The Ladders, you sort of say, I have a feeling that Mark will be successful here. And so those are the kind of investments which, of course, we think Mark's a total lunatic in all the right ways, but that is an easier investment to make because Mark is a proven entity.
Great. We have our first question from Twitter.
Yes. I'm going to pour a little more of this.
Oh, yeah. It is, so you like to invest in lunatics. Are you a lunatic?
No. Am I a lunatic?
I'm just kidding, that was not from Twitter. I just made that up.
Am I a lunatic? Well, I don't know. I think probably my wife would say I am. I think
I'm
that.
Kind of just kidding.
No. Look, I mean, like, I'm flattered that you would think that I might be. Yeah, I think I'm a lunatic.
Okay.
Yeah, I hope so.
What's your craziest quality?
You want to know what's funny? So back to Nozin, back to Mark's company. I'm giving him like a real pitch here. Good. So Nozin is a company where it's an app and you sign into it and you rate the qualities of the people that you work with. Okay. And it's all positive the way so it's not like, is this person mean or nice or stupid or smart, but are they sort of conventional or well, by the way, conventional or unconventional, I think is one of the comparisons. Or are they assertive or thoughtful? It's sort of, it's too positive, so no one's getting their feelings hurt. But and then the qualities seem to get grouped together.
Right. You can kind of paint a picture based on
You can paint a picture, and so most people, it's like there's the red qualities and there's the blue qualities, and most people are like, have like, a tendency towards all the red qualities. And by the way, you can't affect your own rating. This is the people around you. So I have been using the app in beta, and I went in and looked at it, and I have all the red qualities, like impatient, assertive, like unconventional, all this stuff, and then friendly, which is like the blue quality. Right. And so I think that might be like I have all the psycho qualities, but I think my thing is,
you're nice.
but I am a nice guy, which I think is that's like my special skill, which is not just being a steamrolling jerk. It's being a steamrolling jerk, but actually like not being that, like actually caring about the people that I work with. And I think that is my psycho-ness.
Okay, I'd call it your saving grace, maybe.
Okay. Maybe that's what we're talking about.
All right, we have an actual question from Twitter now, which is, what do you think is the biggest barrier to entrepreneurship, #entrepreneurship today?
Well, I think it actually depends on, so in many situations, I think the biggest barrier is actually like a financial barrier to being able to afford to take the risks that entrepreneurship, sort of entail. I was really lucky that when I had a vision to start Thrillist, my parents were super supportive and said, we'll help you with your rent for the next 6 months, and we'll like give you the opportunity to go and do this.
Yeah.
And frankly, it ended up being a lot more than 6 months. But they were really supportive and gave me the sort of green light to feel like I could do it. I think I meet a lot of people who want to be entrepreneurial, but who, and I don't want to say that, I don't think of it as an excuse. There's a lot of people who they have student loans, they want to start something, they have an idea, but like they have to work their butt off in whatever they're doing, and they have a good idea, but they can't see it through. And if you actually think about, when Facebook was launching, everyone in the world said, oh man, I had that idea. When I launched Thrillist, the number of emails that I got from people saying, I had that idea 5 years ago to do daily. I'm like, cool, that's awesome. I'm doing it. Where's your version of it?
Right.
And I think that circumstances play a big role. Like, it's not just that like I took the big risk. Like, I didn't really take the big risk because I had support financially to like allow me to. Like, I'm not embarrassed by that. That's not something that I need to like be ashamed of. Like, that's lucky. And I think that a lot of people have amazing ideas but are not able to pursue them because of the situations that they have. I think more generally, the barriers to entrepreneurship are that, I think right now, entrepreneurship is sort of so hot. I mean, like, Inc. is in a real sweet spot right now from a content perspective, right? Like, this is just a space that people are drawn to. I think,
and we've only been at it 35 years to get to this spot.
But like, the movie The Social Network was like the cherry on top of like everyone can do anything they want. And that, I think one of the barriers now is that it's almost like a buzzword. Everybody wants to be an entrepreneur, to the point where there is, and there's so much money in and around investing in the next Facebook, that it's a little watered down.
Yeah. So you think both having the means and sort of just that there's so much froth out there.
There's so I think that it's easy to discount entrepreneurship, and it's easy to sort of not to be scared off by it because you get lost in the noise. So I think that those are some of the factors that sort of contribute to making it tough.
Yeah, that's great. We have a really great question from Twitter as well.
Who on Twitter? Let's give them
His name,
let's give them a shout out.
I think is BJ Lomax.
Okay.
I'm a CEO of an app launching soon, but I'm having trouble gaining respect because my dad is the primary investor.
Yep.
Sounds familiar.
Well, my dad was not the primary investor, but he was the investor in me.
Yeah.
But not in Thrillist.
Okay.
But
he did invest, right?
No. So Lerer Ventures invested in our A round last year.
Okay.
But we raised no money.
Very beginning.
Not from the very beginning. No.
Okay.
But
still relevant.
Yeah. Well, so that's a good question.
I mean, and in fairness, your dad has said some interesting things about nepotism and always, wanting to be there to support his kids.
Absolutely. And my first kid is on the way, and I will inherit that belief. I think that there is, that's a tough situation if you don't face it head on. It's really easy to be embarrassed of nepotism or of like a situation that frankly is out of your control, like good for you, lucky for you that you have someone who will support you in your dream to bring this thing to life. Now, part of why I didn't take money from my dad is that I didn't want the added pressure of the pressure that I was going to put on myself, and also feeling a financial pressure to my family, which is why I refused to take money from my family. But I can tell you that you should not be ashamed of it, but it should fire you up even more to do great work and to feel responsible and to treat that money like it's your own, and to treat your dad like a real investor. And that means real reporting. That means real hard like goals that you set, and if you miss them, you have to have real consequences like you would with a real board. You can't take advantage of the fact that it's your dad. Great, like that's a really efficient, good way to do it. You'll probably have more ownership of the business because you didn't have to raise it from a third party. That's the pro. Now don't squander the opportunity. Take advantage of it and lean head in. And by the way, so we started Lerer Ventures 5 years after I started my company. I would never have done Lerer Ventures with my dad if I didn't feel that I had earned the right to be a peer of his in business. Now, does he have more wisdom than me, more experience? Is he smarter, all this shit? For sure. But, I don't know if I'm allowed to curse, but.
What's done is done.
Okay, like Norton will be showing up at my apartment later. But what I would say is that there is not, I earned the right to do it, and what I brought to the table was different than what he brought. He brought, relationships to, additional capital to be able to raise money for the fund. He brought, again, wisdom and sort of some experience that I could never have had or faked. But I brought deal flow from knowing the kids in the market who were starting businesses, and so it was a real partnership where we each had something to bring to the table. I think if BJ's dad is bringing money, bring everything else and build the business and make it awesome. And then you don't need to be ashamed of it. You can lean into it and be proud of it, and people will not think less of you if you don't hide from that.
Great. I think that was a really cool question and a really eloquent answer. So thank you. And thank you, Ben, for being here today.
We're done?
I think
okay.
Wrap it up. That was such a good,
cool.
thorough answer.
Thank you so much for having me.
Yeah, of course. And thank
Thanks,
you,
guys.
viewers, on this live chat. I really appreciate you tuning in.